Boom.
Okay. And we're live, guys.
Traderstation, what's going on?
Hey, people.
Welcome to the Traderstation
Hi,
Podcast, guys.
What's this, number 5?
Alright.
Oh,
No, this is number
wow.
6, actually.
That's 6.
I know.
I like it.
Yeah. We gotta do something special for number 10.
Yes, we certainly should.
Yeah.
Yeah, man. We are.
Alright, let's kick things off like we usually do. Pick of the week. Has anyone got one they'd like to speak on?
I can go first.
Alright.
First of all, I want to give a shout out to Tom Brady and the New England Patriots playing a pretty good game right now, and but we'll get into the trading aspect now.
Sorry guys. Sorry about that, guys.
So last week my pick was Euro
Good to hear
Aussie,
that.
and I am going to stick with the Euro Aussie this week. There's not much changed since last week. You know, we were going sideways, and I said I wanted to get in, but I wanted to get in the high 151 areas, and it was trading just over 152 at that time. And you know, we had some news come in. We had a huge flush down below 151, and I actually bought the close of that bar. I bought small, and you know, I think one of our podcast topics is going to be trading small and scaling in. So I'll talk about that a little bit more once we get to that topic. But anyways, that flush down after the Aussie news just gave me a chance to buy small and put my stop at just below 150, you know, 25 pips lower, and it's holding up well. Now we got we're getting, it looks like on the 4-hour chart, we're getting like a second entry. You can see the bulls create the last 4-hour bar was a bull bar, and if we trade above that price, I'd like to enter a little bit more. I'd like to enter you know, with a full position, and I just like those second pushes up. So the bulls, you know, they had their first push up on November 12th, and we were able to get it up to like a 20 period EMA, and you know, bulls were able to take it down, but now it looks like bulls are getting a second chance at a push higher, and you know, I like those second chance opportunities, so I'll take on a little bit more risk here with that. And we definitely are in a bear channel for sure. I think I might do another video on this Euro Aussie pick, but I just really like the context that we're at around this 150 area, and you know, the bears haven't been all that aggressive. So you know, I'm gonna stick with that pick, and I'm looking to get to 154 as kind of like the first target, and then look for 156 and over after that. So I'm sticking with the same pick for this week, guys.
I like that. 150 does look like a really strong level. It's holding up.
Yeah. So this is a real good area to buy, because at first I thought it was gonna take off around 152, and then I was gonna miss it actually. But you know, I like that we got that little flush, and this is giving you a good risk to reward setup, I think. On the other hand, if you wanted to play it to the bearish side, I mean, I think you have to put your stop around 153, 154, and then you can play it down toward like 148 or so. That'll be the bottom of the bear channel lines that it's in. But I'm just taking a bet that this downtrend is over, and that we're looking for some type of at least a mini reversal up to the 154, 155 area for now.
Yeah.
That's that.
Yeah, I agree with that. Anyone else wanna give their pick?
Oh, okay. US dollar, yeah. So we're looking at sort of the daily time frame. And you see the sort of
Which
dollar,
chart?
yeah.
Sorry?
Alright.
Oh, dollar, yeah.
Red candles in August, maybe on the daily. And price went into a sort of rangy period. And I remember saying, you know, if we break it and go down to 180, then I'll be looking buy. And ever since it's just gone up and up and up, and I did have a small position, but
Hold on, you're a bit quiet there,
sorry?
Mike. Oh yeah, you sound better
Okay,
now.
so I had a small position at 119.20, and I did get out a bit early. But the price has gone all the way up to the 123 and it's falling back down now. So I mean, it broke the top of that range, so that can switch roles and come to a nice level to take a buy. However, I'm not quite sure where it could go from there. And I'll be targeting sort of the 120 because I see a nice few candles in there, a nice cluster of candles. So I'll be looking to get out before that, and then see what happens from there. But at the moment, I'm just playing a waiting game, seeing if price comes back to the 122 level. It's down now, I think. Yeah.
Yeah, there was a gap down, and it's like it's bounced
So I
up
need to
straight
see how
away.
that reacts. Probably continue downwards as the gets that one thing. So I'd like to see it go back up, and all the way up to 123, 124. Like, it'll just be retesting the zone. The range that's been broken.
Yeah. I actually had an entry at 12225, which has obviously been triggered now.
So
Nice. Yeah, this 4-hour bar could potentially be like a good signal bar if it closes up near its high right there. It's a nice bar to buy on top of and just kind of risk to below the bar, keep it simple like that. So I like that. I like that 122 area too. So me personally, I would, I'd want my stop below that, but you could play it both ways, I think.
I think you have to have your stop. So if it does pull back, you want your stop sort of the 121.5 level.
Yeah, that's pretty much where I've got it.
Nice.
Yeah.
See what happens from there.
Yep. Well, me, I've just been looking at the European equities markets like CAC 40 and even DAX, and since the unfortunate happening of what happened in France, I got news that they actually might open lower and they actually might take a dive, since like some of the borders are closed, so then that will slow production from companies. So basically what I'm saying is that if you sell the DAX and the CAC 40, then you might have a very good profit, as if you go on the Euro USD, you can see that it did gap lower than usual, obviously because of the euro there right now. So then I'm actually expecting it to actually go lower, hitting the 1.0700 level, and then actually going on to hitting 1.0650 level. So I'm still short on Euro USD, and I'm also short on the AUD USD as well, as there's going to be further easing until mid-December possibly. So then I will stay short on the Euro USD for definitely.
Yeah, that was one thing I was going to mention about the euro is on Monday, tomorrow, around 10:15 London time in the morning, Mario Draghi is going to be speaking, and last time he spoke, the euro just crashed, and we all know what his views are on easing, and so he might talk the euro down. So that's one thing to keep an eye on. But and also we've had this stuff with France, and yeah, like I said, DAX and CAC 40. I've actually been short on DAX from 1100, so 11,000. So yeah, it's doing quite well.
What's the CAC 40?
It's the French index.
It's like the French index.
Say that again. It's what?
The French index of
yeah, because of what happened in France. So then that's why it would be a definite short.
Right.
Yeah.
Nice.
But do
Well, it's not nice, is it? But
Wow.
Chart.
That's,
in
yeah.
terms of trading,
Nice trade idea. Nice trade
yeah,
idea.
that is trade.
Nah, but seriously, rest in peace, and that's a terrible, terrible thing that happened out there.
Exactly.
Definitely, yeah.
Yeah. But yeah, I guess I have to say my pick of the week now. It was I was stuck between the euro and the pound, back to the sterling. Last week my pick was the Aussie, and it's still trading around the same kind of levels that it was at last week when I checked it, so it hasn't really made that much. Well, it did go
Yeah, it went up a little bit.
on the back, on the back of that news, but yeah, nothing like to set the direction, I guess. So I think I'm gonna head back to the pound. It's come above that 152 level, which is quite strong, even though it's been gone through quite a few times, but it's still one level to keep an eye on. Looking at the daily candles, it looks there was like so many bullish candles on the past previous days, and it does look like it is slightly exhausted, but I can't see it heading back down. But if you look at the bigger picture, you can see that it's in a bear channel. There's lower lows and there's lower highs, so it could make it up to about 1535, 153, and then head back down again, and that would be the next lower low. Could even head up to 154.
I think 154 good level. Price comes
Yeah.
back there.
Definitely.
Another sell.
Very good level.
Yeah, 154 would be a very good level to sell from, and so yeah, I think my bias on this pair would be short, but before it falls, it will. I think it will head up to at least 1535 at least. So that's my pick.
Yep.
Nice.
Alright, we might as well get started on more something that Christos wanted to speak on, in particular, scaling in small positions.
Yeah, I just think if you trade small, if you enter small, it just kind of it eases your mind, because sometimes you're like, oh, is this setup good enough? Do I really like this setup? Oh, I think it could still go a little bit lower. I want to get long here, but I still think it could go a little bit lower. And that's kind of what I thought on the Euro Aussie last week. And I was tempted to buy small above 52, but instead I said no, I'm gonna wait till we get below 152. And then I heard that news was coming out. So when that news was coming out, I said, all right, I'm just gonna get rid of my order, my limit order ready to buy, and I'm gonna wait for that news bar, because it's either gonna trend the market up or it's gonna trend the market down. And we got that big bear bar, and I bought the close of the bear bar, and I bought small. And now that I'm getting like a second entry, if we can create a nice bull bar again, I'd be willing to go in full size above like a nice bull bar. So I just think trading small, I don't know, is that something, do you guys like to enter full positions, or do you guys like to kind of scale into positions? Wait
I like
for something to
scale
pay
into
you and then
positions
scale in.
sometimes.
So many ways to scale in, but
When it's especially on long-term positions, I like to scale in, because then you can kind of compound on your trade as it goes along, and obviously you have more of an opportunity to do that on a long-term position. And that's when I do it personally. I don't know about I think Doug does that
Yeah, I
as well.
do that
He likes to scale
every
in.
single time. I do that every single time. Yeah,
Yeah.
that's the way I trade. So I just scale in every time. Just and it was like small, and then at the end of the trade, it'll be a big trade. So yeah, that's what I do.
And at the end of the
Right.
day,
So you wait for the position to pay you before you start scaling in more again, right?
Yeah,
yeah,
really. Well,
You,
yeah.
you you're
What
never
I
scaling in like below like the kind of dollar cost average.
well, yeah, I do that as well. But I just
Okay.
yeah. So it's just like on the pair that I'm actually trading. So
the good
I'm
thing
not gonna
about
add more if it's gonna lose. So
the good thing about scaling is that you do reduce your average price for taking that trade on. But I mean, what are the chances of that trade going against you? And then you're stuck in a well, I guess you're never stuck in big losses. You're scaling in, aren't you? You're taking some positions, even though you're going against the price. It's a good way to reduce your average purchase price. Instead of buying, say, 3 lots in one go, you can buy one now, one at a lower price, and one at a final price, and just hope the price turns in your direction based on your strategy. But I don't personally scale into positions. I I don't scale in when price is going against me. That's I'd only scale after the trade is paid off.
Fair enough.
On rather
Yeah.
than add while I'm still in a loss. Plus, I
Yeah.
don't have the time. My
Yeah.
trading style and lifestyle means I don't have the time to add these positions on. I just add them. I just put the trade on and I just let the market do its thing.
Yeah, for sure. I mean, a lot of people either like scaling in when it's going for them or scaling in when it's going against them. Like, I think it's kind of like one or the other. Like Doug says he does both. I kind of do both too. But I kind of like scaling in when it goes against me. Like, it's just the way. And the thing is, if I buy now and then I buy 100 pips lower, like if I don't like the price action, I usually have a good chance of getting out in the middle, so break even on my entire position. So I just think if you enter small, it kind of, you're just at peace with whatever happens, because even if it does immediately go against you, then you're only losing like half of what your risk tolerance is. But if it goes for you right away, then hey, you get to make a little bit and reap those rewards. So I think it can really help. Especially I think if you're a new trader though, I really think you should only be scaling in when it's going for you. Wait for that position to pay you,
Yeah.
and then add another position. Add small.
I think it'd be too hard for most newbies to even consider adding new positions when the trade's going against them. Like, they'd be panicking.
Not to mention the emotional discomfort it would give them.
Exactly. Yeah.
But yeah, I mean, I don't think that's something a lot of people do in the chat. Just from general discussions, I think I don't think I've heard a lot of you guys say you're trading small and you'll add once the position starts paying you. I mean, it's a real good way to do it, and if you're doing something like that, don't be afraid to to start taking your profits off the table. And if you enter again 50 pips higher and it starts reversing right away on you and you're down on that position, don't be afraid to take profits on at least half your position, and just kind of keep working your position and accumulating things as they go your way. I think it's a good way to trade, especially for a beginner.
Yeah, I agree with that. It's a great tool to have in your whole trading arsenal, I guess. It's a good technique. Yeah, Doug's left us. I think he's got technical difficulties at the moment, so he's kind of disappeared. But I'm sure he'll be back.
Cool.
So yeah. Anything else you guys want to speak on in terms of trading techniques? Oh, cool. All right. Let's move on to trading psychology. Now, obviously we've spoken on, the difficulties and of trading when you're a newbie and things like that. But what would you guys say is the most difficult thing to master? Like, it's something that I've mentioned in the chat or asked people in the chat before, and we've got loads of different responses. And we did speak about things we struggled with when we were starting out, and different ways. We talked about our evolution as traders last week. But what is the one thing that you guys struggled with the most when starting out?
Me personally was probably discipline, because I mean sometimes you're trading a certain strategy and it's just you. I mean, you could have red days and turn into red weeks, turn into red months, and you're just like you're trying to stick to that strategy and it's just not paying off, and it does eat away at your confidence, and you just want to ditch the strategy. But then at the end of the day, isn't the strategy just flawed? It's your application of the strategy. So I think the most difficult thing is discipline, especially when things aren't going your way. I think that's important.
Yeah, for sure. That's definitely tough, especially for a beginning trader. You start losing a few trades, then you start switching up your system, changing things, and if you had just stayed original, then things probably would have ended up working. But I'm going to take it a little elsewhere. I'm going to say just kind of being real with myself and how difficult this is. There was so many times throughout my journey and so many strategies I created where I was just kind of like, I'm doing all right, but if I could just do this a little bit better, then I'll be profitable. Or if I can just do that a little bit better, then I'll be profitable. When in reality, like, there was just so much more screen time and patience and things I needed to learn, and I kind of heard it from a friend. I know a friend that's getting into trading, and he said the same exact thing to me the other day, like, if I can just stay consistent with my position sizes, then I can learn to be profitable. And it's like, I feel like there's just so much more to being profitable than what you really think in the beginning. In the beginning you're thinking it's going to be easy, this and that, if I can just do this, if I can just do that. But I think once you actually realize like how difficult being profitable is, like, I think that's when you kind of really take a turn. Once you start realizing, hey man, this is a really tough game. Like, it's not if I can just do this a tiny bit better. Like, there's a lot of moving parts that go into being a profitable trader. Even just living the lifestyle of a profitable trader. Like, at times you gotta stay active. You gotta stay physically active. You gotta just do things to work your mind and stuff like that. And staring at the screen 24 hours a day, 7 days a week, is probably not too healthy for you as a trader. So there's just a lot of moving parts to it, and being real with myself is something I definitely was not being in the beginning. I thought I was going to be buying stocks for under a penny and flipping them for 5 cents a share and making a living that way. It's just so much harder than that. Or some of the Forex people, like, this is going to be easy. I'm just going to go in with 500,000 units, try to catch 10 pips, and bam, I'm going to have the South Beach oceanfront, beach house. But it's like, there's just so much more to it than that, and you really got to be real with yourself in the beginning of this.
There's a lot of components, like you said, that go into it. Obviously, there's the obvious side, the technical side, and like strategies and things like that. But then there's the issues with yourself and things you're gonna have to change, like things you've lived with your whole life, the way you think, like things that come naturally to you. You have to go against.
Yeah.
Like, it's just it's tough.
Sure.
So,
How about you, Jeff?
What was the most difficult thing for me? I think think the most difficult thing for me, I don't want to sound like I've got a big head or anything, but I don't think it was losses, because a lot of people find it hard to handle losses, but I don't know, it's just naturally me. Like when I used to lose, obviously it bothered me, of course, but I was able to bounce back from it very quickly. But I think the trouble with me was probably discipline. As like Mike said, it was discipline, and it wasn't just discipline with sticking to a strategy. It was discipline with everything, like lot sizes and where I put my stop loss and moving my stop loss about too much, things like that. Like it was just it wasn't mechanical at all. It was very very emotional. But I feel like the only reason that I could handle these losses is because I knew that I really wanted to do this, and so I just kept at it. But if it wasn't for that, I probably would have been much worse.
Yeah, I was gonna ask, like, how you said you were able to handle the losses well, like how? Just because you knew, like, you know, it doesn't matter if I'm gonna lose, like I'm here for the next 20 years. You know what I'm saying? Was it something like that, or I mean, what else do you think kind of helped? You know, keep your mind straight whenever you were losing?
I think it was the fact that I knew there were people out there that were doing this and they were doing it correctly, and I knew in myself that I could do it too. I just had to go through this. This is just a temporary thing. I'm gonna have to move on. Like you said, I'm gonna be here for the next 20 years. Like I'm gonna be able to perfect this. I just have to keep going, and that's what pushed me, I guess.
Yeah. What about you, Mike? Were you like, obviously we all, you know, lost a lot. Like how do you keep your, even now, like how do you keep your mind right when you're losing, you know?
I log off. That's what I do. I just log off.
You log off.
I just move on to the next game. I don't specifically like look at the charts and, you know, try and find the next trade. I think I've had orders in the market that have been there for weeks now. I don't move, I don't mess with them. So they get filled when they get filled, really. And sometimes I go weeks without a trade, and then I get like 5 in one day. So it's just how it goes. So when I lose, I just take it on the chin. Just wait for the next trade to happen. Obviously, my losses are quite small compared to my account size, so I don't really feel the sting anymore. There were times where I was losing a big portion of my account at once. I mean, it was ridiculous. But these days, probably 0.5%.
Wow.
On my account size, maybe 3% at maximum.
Is that because you're trading with like a $750,000 account, or what's the deal?
No, I have a small risk tolerance, so I keep my losses really small.
Yeah.
But in the past, I could lose like 20% of my account in one trade. It takes a lot out of you as a person to lose 20% of your account in one bad decision. And it could have been a good decision, just the markets didn't work your way at the time. You're following the strategy exactly as you've done before. For some reason, that trade hasn't worked out, and you're 20% worse off.
Yeah, that's no way to trade right there.
You just move on.
Yeah. Well, like both of you, you know, you guys pretty much mentioned mechanics, like being mechanical versus being emotional, and that's something I stress a lot. Is like. You know, I have a cousin too that's learning how to trade, and you know he pretty much trades the ES, the E-minis, you know, intraday, and it's just so easy in the ES or even in any intraday trading, I guess, forex trading, whatever. It's just so easy to want to take like 10, 20, 50 trades a day, and it's like when you're taking that many trades, like in a span of like a few hours, it's tough to make that mechanical. Like the only way, like there's just very emotional, very subjective trading when you're taking 20 trades intraday. So, you know, one thing I stress is even with paper trading, like paper trading can be a good thing, as long as you keep things mechanical,
Yeah.
and the more mechanical you stay, the easier it is to say, oh, I'm just going through a couple of losses here. But the easier it is to also know if you have a strategy that's actually working. Because, yeah, you take 15 trades today and you make $1,000. Like, you don't even know how you made that money. There's
Yeah.
no mechanics to it. You can't go in tomorrow and do the same thing. So
Yeah.
if you're mechanical with your trading, I think that can also help you sustain losses and say, well, that's what the chart looks like when I lose, and that just happens to happen this time. That doesn't mean it's going to happen next time. So yeah, mechanics over emotions for sure.
Yeah, there's a blog post on that by Mike on the website actually, about trading
Yep,
like a
yep,
robot.
yep.
Just
Would be
be
one of my
emotionless,
first ones.
mechanical. Yeah, execute, get it done,
Yeah.
and move on. That's the best way to trade, really. And obviously, it's very, very difficult to do that because when you're trading with your own money, we've all got lives and goals and aspirations that we've got in our mind. And obviously, a robot wouldn't have those, but we do. And so it's very hard to forget about that and focus on the trading. But at the end of the day, that's what you have to do. You have to do your best to be as mechanical as possible. And
Sure.
yeah. We've actually got a question. Let me get
Cool.
it up now. It's about technical analysis. Can we mostly rely on technical analysis to trade and not really focus on fundamental analysis besides NFP? Alright, we're gonna have mixed answers here.
Repeat your question.
Alright, he said, can we mostly rely on technical analysis to trade and not rely on focusing on fundamental analysis besides NFP?
Okay.
My answer is that I don't like fundamentals at all. I'm pretty much entirely technical. That being said, that doesn't mean I don't know when news events are coming out. Like, I understand when news events are coming out, like that Aussie trade. I understood a news event was coming out, and I literally pulled my order from the market. And the reason I did that was because, I had it in the high 51s, but if that news event drove the market down, it would just be a big bear bar, and I could just buy the low, exactly like I did. So essentially, my order, it would have went right through my order with the news event. And I think understanding when news events are around is important, but to try to make a decision based on what the news event is going to say, if it's going to be good news, bad news, is something that I don't do. And I like the economics, I like world economics, but I just find it boring. I don't want to keep up with it, to be honest. And like I think it's just more pieces to the puzzle. And for me, just trying to keep it as simple as possible. Like, I only want a few pieces to try to put together. I don't want this huge complex puzzle. So for me, I really focus on technicals over fundamentals.
I like to look at fundamentals partly because I'm just interested in what's going on, and also just to be aware of it for my trade. My trades aren't based on fundamentals, but I do have fundamentals in my mind when I'm making my decisions because, like you said, these news events can push the market in certain directions, and if you've got orders in place or like you've got a trade running, you want to be careful and you want to be aware so you can manage these positions in a much better way. Not to say that I'm not the type of person to see NFP and guess where it's gonna go and then trade it. Like, it's always best to if you're going to trade around those times, you better know what you're doing, because you could lose a lot of money.
And you better not have a 10 pip stop loss, because
that's gonna get blown through straight away. And even with those news events, you get whipsaws, so price goes up and down, and you don't even know where it's going. So you could jump in, and I think I mentioned this last time, and it will just reverse on you straight away. So it's very difficult, but I wouldn't say completely shut out fundamentals and economics. My own economic knowledge compared to, like, say, Mike, is very narrow, because mine is mostly focused around forex, to be honest. Like, it's all to do with things to do with forex. Most of my economic knowledge, obviously I have other economic knowledge, but I'd say compared to Mike, it's broad, which is ironic because he's not a big fan of fundamentals.
I'm waiting for you guys to finish. Right. I do not care one bit about fundamentals. I do not care one bit. I think the only things fundamentals do is drive price. They just create volatility. That is all they do. Are you trying to tell me that there were over 200,000 jobs created in America last month?
Yeah, that was.
I don't believe that.
That was really. I think the last figure was like what, 100?
Yeah,
from
157 to 250 something in what is basically a slowing market. It's impossible.
Yeah.
And are you trying to tell me that the crude stocks in America were 4 million barrels over the predicted level? 4 million barrels.
Yeah. I don't think they can get that
wrong. You can't misplace 4 million barrels. That's impossible. So I don't care what the fundamentals say, because they're always factored into price. The problem is you can't find those levels. It's impossible to find where those levels are. All you do is you look at a chart. Now this is why I trade the bigger time frame, because when price comes out and you get these whipsaws, they tend to usually obey bigger time frame levels. I mean, your 10-minute charts and your 1-hour charts will get ripped to shreds. If you're using, 10 pip stop loss, you can forget that trade. That trade's gone. You'd be lucky if price was going in your direction, but if it went against you, you'd be at a loss pretty quickly. The market is very unforgiving in that way. You lose straight away. But fundamentals for day trading are ridiculously risky.
Yeah, day traders definitely.
You trade monthly time frames or weekly time frames or daily time frames. Those don't bother you, You just think it's another bend in the market. But when you're trading and looking to get out every day in profit, you will struggle trading around fundamentals, because the volatility is ridiculous. It's something else. And I mean, we do. I wouldn't say we don't predict the levels, the numbers. We do try and predict it, but we've never actually traded from fundamentals. We just personally just do it for a laugh. I would say what kind of numbers I'm expecting, but I've never said, "Oh, I'm going to go long because I expect the dollar to weaken based on NFP." I'll just use the chart. I'll just say what the charts are telling me. So that's my view on it. I hate fundamentals.
I think last week, or when NFP came out recently, Christos said in the chat, he mentioned how it basically just followed price action. Essentially, everything happened according to price. And if you look at the charts a lot, that tends to happen quite a lot. Like, the news tends to follow price action quite a lot, because that's just where they want the levels to be, and they just end up pushing it with the news, like Mike said. But sometimes it can go against price action, just because sometimes the market
for sure,
you out,
for sure.
Things like that are gonna happen. So obviously it's good to be aware of it, but obviously everyone's style differs, and that's what we like to encourage at the Traderstation. Like, even between us, we, as you just heard, we all have different opinions on this, but it doesn't stop any of us from being profitable. You just got to find what suits you, like we've said a million times.
Whatever you do, it's just important to stay consistent with it. You know, if you know the news events coming out, you trade daily charts, and you know you're already in a position, and you know it looks like it should continue in your direction. Like if you just stay in the trade every time and rely on the price action, then your results are gonna be whatever they should be, but the problem is if you say, if you try cherry picking which news event is going to do what, and which news event you get out for and which news event you stay in for, I think you're just going to have inconsistent results, and the thing you're trying to create is consistency with your mechanics and everything that you do, so stay consistent.
And I think the problem is people are too bothered with where price is going to go. Everyone wants to look at a fundamental report and say, okay, this is going to be negative, it's expected to be negative, so prices go in this way. But I think the main question is, what would you do when that price gets there?
Sure.
Because saying price is going to get there isn't going to make you any money whatsoever. You're not going to be in a profitable trade by guessing where price is going. It's your action.
Right.
Gets you the good trade.
Exactly.
Right. And another thing we've said is, even if you knew the number ahead of time, would you really know how price is going to react to that news?
Exactly.
It could be good news, but the market thinks, nah, it's not worth it.
Right.
I've seen news reports come out that are positive, and the market has not reacted at all. It's just gone sideways.
Yeah, exactly. Yeah, I've seen that.
Because they're waiting for much bigger news.
And
right.
You just don't know what the plan is, because at the end of the day, the market's moving according to their plan, and you don't know what that plan is. You're just trying to basically piggyback on their movements. That's all you're trying to do. So
we don't move the markets. The big.
I mean, I could have swore there was a few times I went in with like 20,000 units instead of 10,000, and it started moving in my direction immediately. So I had to be me right there.
I think that's why you bought. That's when you bought half the company.
That was moving the market that time. That was ridiculous. Note to self, guys: never buy $25,000 worth of a stock that's trading under 1 penny a share. Just don't do it.
That's the company right there. Oh man, that's
all right. Get your questions in, guys. We're running out of time, but
So, I mean, I think all three of us are leaning toward a bearish kind of, I don't want to throw the word recession out there because it's such a strong word, but I think over the next year, I would say us three are fairly bearish on the markets overall. Is that a fair assessment?
Definitely.
I think they've been
What do you guys kind of do to protect yourselves? I mean, I know in the Forex market, things can go either way. It's not like betting on, the US S&P 500 or the European markets. Like it's different for me. Like I have, an IRA account that pretty much tracks, the S&P markets or whatever. But one thing I'm doing is I'm literally short the market in my IRA account right now, so for the next year, I'm going to be short the market. And that's something you don't see a lot of people do in their retirement accounts. Their retirement accounts are all betting on, roses and dandelions going long until the end of time. So I was just wondering, do you guys have anything that you're trying to protect, or do you protect yourselves in any ways, or are you just kind of playing the Forex charts?
Unfortunately, we don't have the same system, so our retirement funds are not managed by us at all. We have no control over retirement funds. I think you just put money into a pot, basically, and that just gets dealt with by fund managers and all that. I think if you're over 55, you can move it to cash and deal with it by yourself, but anything before then you couldn't bring your money out. So any money you have in cash, you can obviously trade up or down. Put that into a trading account, but as for retirement, you have no control whatsoever.
you have no control, but I mean, what are you talking about? You guys have 401ks out there, right?
We have a similar system, yes.
Okay, and we in the U.S. with our 401ks, yeah, we have very little control. Like you can pretty much just pick what mutual fund you want to go in, but you don't even get that choice.
Nope.
No.
But that's if you work for a company. If you are self-employed, if you're young, you can put it into it. You guys have IRAs, right?
Nope.
No. What?
No, we don't have that.
So what do you do if you want to open up a long-term account? What does the mom and pop investor do? The mom and pop that owns a business for
You
themselves.
open a stocks and shares ISA.
Say that again?
Savings account.
Oh, okay.
Nice.
Okay.
Yeah. You open an individual savings account and you get an allowance for tax, basically. And that's it. You can invest in stocks and shares, but it's individual stocks and shares. You don't get to follow an index.
You can't follow an index. ETFs or anything like that?
Nope.
What the heck?
You guys like
Yeah, what's gonna happen is when everything goes to hell. Is exactly, I saw you posted that South Park clip. Everyone with their money in that is just gonna be
Oh
told
my
that
gosh,
as well.
that is horrible.
Yeah.
That's basically the way it's going to
Yeah.
go. During the next recession, we're just going to get told, oh, your money's not there anymore.
Are you telling me
Yeah.
there is no way for a mother and father in London that own a business to hedge themselves in case a recession comes?
The Asians,
They better start trading for it.
the Asian parents know how to do it. They just buy bonds in their kids'
Yeah.
names and watch it grow during a downturn. And it's basically that.
That is horrible.
I know.
Or you could just invest in other things like precious metals and
Yeah.
land.
Investing in
Active
gold has
management.
done so well.
Yeah. You can invest. You can invest in like you can open an active account and you can trade that account, but not many people have the experience or know-how. They would rather be lazy and give it to some fund manager, fund, and he looks after it and takes his 2% every year. Even if it makes them nothing, he still takes 2%.
So you guys couldn't even open up account and put your money long the U.S. markets, like in the S&P 500? What? Man, that is bizarre. I am glad I do not live over there.
But we do have the NHS.
Yeah, true. Free health.
Oh, wow, that is nice. That is nice. Man, that's crazy. That's too bad. Like, that is nuts. That's boggling my mind right now.
But we might lose the health.
They're not actively controlled accounts. The mutual funds and all that, and the trackers, then you can't actively manage them. They're very long term.
Right.
There's no hedging involved. I think it's not open to the masses. If that's the best.
Right. Man, that's tough. So what do you guys recommend? Pretty much, someone in your shoes living, next to you, just buy some gold bars or, buy some guns. What do you guys recommend? Stock up water.
Yeah. Well, what Doug's doing is he's buying gold.
Right.
Doug's stocking up on gold.
Right.
Physical assets.
Yeah.
Not cars.
Yeah, physical assets.
Not shoes and belts. Actual physical assets.
Yeah. Yeah.
Like watches and necklaces.
None of that.
No.
I got a gold necklace though.
But you can buy physical assets, I guess. And, you can buy. I mean, I wouldn't say buy stocks and shares, but not before recession. Bad way to go.
Isn't that amazing though that the government can say the only thing you can do as a mom and pop investor is be long the market? Like, but then they sit here and they preach how we need car insurance, we need life insurance, we need house insurance. But when it comes to your retirement portfolio, who gives a shit? It's just gonna go up till you die. Like, that's just not true. You look back on charts and that's not true. Like, what is a mom and pop supposed to do?
The greatest solution.
Well, people don't know this. That's why they can get away with it. People don't know. People just think, oh yeah, it's
You know
gonna
what's
go
worse?
up forever.
In the UK, right, it's the worst thing ever. At least the US market goes up, right? From 2009, the US market has made record highs, right?
Right.
If you looked at the UK market, right, the FTSE 100, right?
Yeah.
Since 2001 maybe, that market hasn't moved at all. It's gone sideways. Since 1999, that market hasn't moved. It's made a record high, but if you were in it in say 1999, you've made no money whatsoever.
Wow, I'm gonna have to check that out. I actually haven't checked that out before. I'm gonna have to find the ticker because it's different on these platforms and stuff out here.
Yeah.
If you went on a monthly chart,
It might not be called FTSE 100. it might
UK
be
100,
UK
yeah.
100.
If you went on the charts, right, from if you invested in the UK stock market in 1999, you're no better off than if you invested in UK markets yesterday. That's how bad it is. So imagine all these people with their retirement money stored away, tracking the UK stock market, and you've made zero. That's how bad it is.
Yeah.
Wow.
Yeah, it's incredible. And you'd get a retirement fund come up to you and say, you know, you have to deposit some money in your account, and you know, we're going to track the FTSE because you know the markets always go up. I mean,
If you bought it in 1999, you were only able to make profit
in 2015,
in 2015.
and if you bought it in 1999, say towards the end, right, just before the bubble burst, you were buying at say 690, right? The highest it's ever been is 7127.
Wow.
I can see that right now.
Nothing at all. So you've never been in profit until 2015.
You probably would have been stopped out a lot over the years.
Wow.
Because it sank all the way down to about 346.
Money in 2003 if you'd invested in 99. Panic would have set in and you've removed your money in 90. I mean, you can't buy at 6.9.
You're breaking up a bit, Mike.
You can't hold your investment, right? Get up 690 or whatever it went up to, right? And hold it all the way back down till 3,000. You just could not do that.
Yeah, I mean that's what happens is it starts going down. All the mom and pop investors panic and they sell at the bottom, and then they watch it
And it goes right back up. Yeah.
watch it go right back up.
Yeah.
Yeah, man, it's really sad. It's like you almost think it's almost fraudulent on the government's part.
It is,
you know,
it is.
it's like you guys should definitely know better. You guys are clearly feeding us the wrong information. Like, how long is this going to go on for? You know, it's a crazy system.
This is the point.
Yeah, but not a lot of people are this aware of things. A lot of people might not even know what the
They are
FTSE
too
100
lazy
is.
to know.
You know, so.
Too lazy to find out. They would much rather sit in front of a box and watch TV all day.
Yeah, you're absolutely right about that. But at the same time, it's almost not even their fault, because when they do go to look around to find something to do with their money, like you just see all the wrong things. Like school is a classic example. Like, what do we learn in school that really helps us grow financially? They say, you know, at least in the U.S., they say take $10,000, invest it into a mutual fund that tracks the market, and don't touch it until you're 65. So from 25 to 65, you know, you've done that, and at age 65, you're the same crappy investor that you were at age 25. Like, you didn't learn anything in the process.
And you paid fees.
Yeah.
And you're paying all these fees. Like, it's crazy, and it's just sad. It's just so sad.
ridiculous. You want to be on the other side, really. That's where you want to be.
Yes.
You want to be the fund manager.
Yeah.
These
Taking
were-
2% off the top. Yep. Man,
Well, we've got 5 minutes left. If you guys have any questions, get them in now.
get them in now. It's too bad Doug
Yeah.
had those technical. It was looking so bright. His microphone sounded good.
I know.
I was
his
like, I
mic
could
was
finally
clear.
hear Doug for once during the podcast. And then 10 minutes later, he was gone.
It was too
Yeah,
good to
right?
be
It's
true.
like when that really cute girl's talking to you at the party for like a couple hours. You're like, yes, I'm going home with her. And then she just disappears for one moment and you never see her again. That's exactly what it was like.
Hey, that's
Bringing
how
back
it's
college memories.
before.
Oh, Christos is. Yeah, we can tell that.
That's
See the
happened
pain
to
in
me
your
too
eyes,
many
man.
times, damn it.
He didn't make that up, guys. Yeah.
Yeah, that's a true story. He never saw her again.
He still tries to find her on Facebook.
Not going with that. Oh man.
Well, maybe next week we'll have a clear Doug. We'll have that.
Praying
for you
for that
guys.
for a while now, haven't we?
That would be nice. That would be nice.
Should be
No
an
questions, huh? Everyone must be watching the Patriot game right now. I think that's what's happening. That's what we got. We got
It's a quiet night. I know a lot of people are working tonight. A lot of people in our chat, like usually in the chat, that are working tonight. So, yeah. But a lot of people just listen afterwards.
Yeah.
It is quite late, and you know the time zone.
Yeah,
and
for
stuff.
sure.
interest.
for sure.
You know. Lucky for some, it's only 6 p.m.
That's right. 6:28 over here. Well, cool. I enjoyed this. I think this is a good one. We definitely have to tell the guys to definitely check this one out. You know, I just think we're getting better and better. You know, we're just more comfortable talking to each other, and we're bringing up better topics by the week, and it's just cool. So I hope everyone else is enjoying it. We enjoy it. We enjoy coming on here and blabbing to you guys. So we'll be doing this for quite some time.
Yep, and soon we'll have special guests, traders
Yes.
coming on, talking to you guys,
Yes.
giving you some tips. So watch
For
out for
sure.
that.
Working on that.
And these are most of them will be real traders who do this for a living.
Absolutely. Absolutely. Not the fake demo account screenshot ideas that you see that you see all day. Anyways, Traderstation, thank you for listening, guys, as always.
So yeah, thanks guys. We'll see you next time.
Peace.